All right. Hello, everybody, and welcome back to another episode of the Wealth Building for Dummies podcast. My name is Kyle Demian. I'm here with Renji Matthew, as always. And today we've got a special podcast episode that we're doing. We're actually going to be breaking down our first book club book that we did for our podcast show. Renji and I have both spent the last 2 weeks reading about 20 pages or so a day of the book Tax-Free Wealth by Tom Wheelwright, who is a CPA and is in collaboration, I think he's in business with Rich Dad, Poor Dad author Robert Kiyosaki. So they talk about a lot of the same principles, and they talk about the cash flow quadrant, becoming a business owner, investor. And this book has a lot of great information about different ways to save money on taxes and different tax strategies, all with the goal of getting you to tax-free wealth. And so we're going to be going back and forth. We're probably going to be looking down, reading our notes, reading directly from the book. This is the first time we're kind of doing a book review. And because there's so much good insight, I think the book has 285 pages. Yeah, 283. And I think there's like a tax tip on just about every single page. So this might be a long show, but there's probably going to be a lot of good advice and insights that come out of this. And speaking of advice and insights that come out of this, I think this is a good time to drop our disclaimer. We are not tax professionals. We're just reporting back on what we read in this book, right? So always seek out your own tax advice. We do call this the Wealth Building for Dummies podcast. If you guys ever try to come sue us, we have lawyers on our side. We call ourselves dummies. So don't sue us, because none of this is intended to be legal, tax, or financial advice. This is all just for educational purposes and to get you guys to start thinking like an entrepreneur, like a business owner, and today give you some potential strategies that could work for you. Obviously, that you should seek out an official tax professional that can actually help you start implementing some of these strategies. So with that, Renji, thank you for being here with us. So we just finished reading the book, right? Let's start with like our overview of what we thought about it. I loved it, but what are some of your initial thoughts on Tax-Free Wealth by Tom?
Yeah, one of my favorite things was, which I knew this, but when he said it the way he said it, it was like, oh, that's a good way to put it. But what he says is, everyone's scared of taxes. When tax season comes, everyone's frantic and trying to get things done, and because it's one of the biggest expenses that we have. But what he says is that the tax code is written to show you how not to pay taxes, right? Because we've talked about this before, how with the rules and regulations and stuff, the tax codes can be up to 77,000 pages or more, and only 30 pages of that is how not to pay or how to pay taxes. And the rest is about how to defer or be tax free. So yeah, the government's trying to incentivize mostly business owners because you're funding the economy and by different ways, which we'll talk about here. But it's showing you how not to pay taxes. So maybe when you guys are listening to this podcast, think about it as, okay, there is a lot of tax codes, but it's to help you keep more of your money. So keep an open mind and think about it that way when you go into it. And when you listen about each of the points we talk about, and like Kyle said, it's going to be more interactive. We're going to be looking at our notes a little bit, and we also have our live audience watching us too. So they'll be having questions in there, and we'll try to bring those questions out too. That way, it just provides more value because it might be questions you're thinking about as you watch it, and maybe it can provide more value and give you more answers. So, but like Kyle said, we are not tax professionals. We're just trying to provide value and show you what we learned. And it might be some of the stuff you hear, it's stuff you've already known, and some might be stuff you've never heard of, and might be something that'll help you do so much better this year. Because again, all of this is tax planning, right? If you wait to do your taxes in April, you're not doing good. You need to start every month. And that's another thing he talks about in the book is like any investment you go into, think about tax planning for that investment. How does it benefit you, not just income wise, but how does it help you on the tax side? Because there's so many incentives in the tax code to help you as a business owner. So what type of incentive is there if you're going into some type of investment? How does it help you with tax side too? So think about it that way. Let's go get
Yeah,
going. Kyle.
let's do it. The first thing I wanted to start with is just like how he presents, taxes to get it started. And he talks about the first chapter is called how how the tax law can be your best friend. And then he goes into the next chapter, taxes are stealing your money, your time, your future. And then the title of chapter 2 is that taxes are fun, easy, and understandable. And I think for most people, that's just such a mindset shift because I think taxes are more so complicated, misunderstood, and stressful, right? But he's already trying to change your mindset that, like, when you know and understand taxes and you realize that they can be for your benefit rather than to your detriment, like, you start to change your mindset, just like anything, in business, it's a lot of mindset shift. And you also need to get your mindset around taxes right, too, because if you don't have the right mindset, taxes are going to be your largest expense over the course of your life. But if you can start to switch that and realize that, hey, if I know and understand taxes, if I know enough to be dangerous, and if I work with the right professionals, you can actually lower your taxes, right? And build tax-free wealth, just like what he talks about. And some of those things that he starts talking about and going into is, tax deductions and tax credits. And now what those are and what you can do with those is by leveraging deductions and leveraging credits effectively, you can then reduce your taxable income. And this includes deductions for expenses like your mortgage interest, property taxes, your business expenses, as well as you can get tax credits for activities like education and even other energy efficient investments. And now to start doing that, here on page 41, I love this little paragraph because he says your first step to increasing your deductible expenses is to become an entrepreneur or investor, right? And that's the whole thing about moving from the left side of the cash flow quadrant to the right, right? And until you take this step, until you become an entrepreneur or investor, you'll always be an average taxpayer, and the tax laws will always be stacked against you. The good news is that you don't have to quit your job. You just have to start acting like an entrepreneur or acting like an investor. And we've done some podcasts and some shows before where we're talking about, right, how to start a side hustle, how to start a side business so you can start taking advantage of some of these tax laws. Last thing he goes on to say in this paragraph is that means the first thing you need to do is increase your financial intelligence by investing in a financial education. And starting a business or investing in a deal without financial education is the riskiest action you can take with respect to your money. Right? So investing in a financial education, whether that's watching our podcasts, watching other people's shows on YouTube's, or spoiler alert, we're working on releasing the we're going to call it the Wealth Academy financial series, where we're going to actually start educating people on the basics of money, where you guys can kind of go through more of a step-by-step, series of videos. Our podcast, we're kind of jumping all over, talking about different aspects, but investing into your financial education. And maybe it's not monetary at first, but just investing the time, right? We graduate from school, and most people never pick up another book or never attend another course or another class again. But if you want to be good in business, if you want to be a super taxpayer, which he calls it, if you want to pay the least amount of taxes, you're going to have to get some education. And he talks about financial education is really like that first step, right? So that was the first part I wanted to talk about. Renji, is there a particular, subject or series that you want to go into for you?
Yeah, so like I mentioned before, one of the things was he mentions it's your money, not the government's. So one of the reasons you want to learn the tax codes, or hire someone that knows the tax codes. So that's something too. You want to hire a tax professional or a tax lawyer or something that knows the tax codes way better than anyone else does, because then they can help you and show you how to use those tax codes to keep more of your money. Because at the end of the day, like he mentions in the book, it's your money, not the government's. You worked hard for it. You earned it by the hours you put in and stuff. So now learn how to also keep that money instead of paying it all back to the government, right? He talks about the tax law being written primarily to reduce your taxes. So Some tax advisors, though, that's something you got to be careful too. Most tax advisors are more interested in protecting themselves instead of reducing your taxes, right? So you gotta find people that are already business owners themselves and using some of these tax codes to benefit themselves. Because if they are using it to benefit themselves, they'll know how to use it to benefit you, right? And then there's also it's called using the tax codes to uh, protect yourself to keep more of your money. It's not tax evasion, right? A
Hmm.
lot of people talk about how if they're trying to evade taxes, you're not trying to evade taxes. You're using the tax codes for your benefits because again, got to remind you, it's your money, not the government's money. So if you use the tax codes to benefit you to keep more of your money, then you're not doing anything illegal. You're following the tax code, right? So you want to find out what the tax codes say. How can I keep more of your money? How can I benefit from the incentives that they provide for us to use? And one of those is real estate, like we've talked about on previous episodes. It's one of the biggest advantages you have because if you're providing real estate for short term or people with lower income and stuff like that, you're providing value. There are incentives for that on there. And one of the things he talks about is every time there's a new president, there's stuff that they're interested in funding, right? So they hire lawyers that are proficient in taxes, and they have them write new tax codes to give you incentives to provide money, provide funding for that. So whenever you do provide funding for that, it's giving you a tax break because they're incentivizing you to follow that, and you are. And so that's what you want to look at. So anytime again, going back to what we said earlier, anytime you want to think about a business or you want to get started with something, not only look at how much income you can make from that, how much profit you can make from that, but is there tax incentives for you? Because if there is, hey, you're going to keep more of that money instead of paying more in taxes later. Because again, it is your money you worked hard to earn, right? So start thinking about how can you keep more of that money. Uh, Back to you, Kyle. What is there anything you want to add to that, or go to the next point you have?
Yeah, no, that's good. That's good. The next thing I want to talk about is the next thing I want to talk about is how he starts going into, real estate. And we've talked about it before. There's a lot of different benefits, tax benefits specifically that come from real estate. And he started talking about those, including the top three probably being the depreciation deductions, cost segregation, and bonus depreciation. Now, depreciation deductions allow property owners to deduct a portion of the property's value each year, which allows you to reduce your taxable income. And this isn't on your primary real estate or your primary residence. This would be on real estate that you own as an investor if you have renters coming from you, right? So that's depreciation. Cost segregation is a strategy that allows you to accelerate the depreciation deductions by identifying shorter lived assets within a property. So think of things as like your appliances, fixtures, and depreciating them separately from the building or the home itself. And then the last part of that was the bonus depreciation, where he talks about how bonus depreciation allows businesses to deduct a significant portion of the cost of the qualifying assets immediately upon the purchase. So you get an immediate tax benefit from something that's not actually going to affect your bottom line, from day one. So those are some of like the initial benefits of owning real estate, being an investor. And of course, he goes way, way more in depth. And we actually kind of talked about it a little bit yesterday, like breaking down the numbers of why real estate investments tend to be, the best place to put your money because of all the tax benefits as well as income, appreciation from the property and so forth and so on. Right. So he does talk about real estate and break that down. Renji, any other thing you want to add about the real estate side or another page you want to start talking about for us too?
Well, real estate, I feel like we hit on that so much, and we've talked
Yeah.
about it plenty, so we can move on from that. One of the other things he talks about is entities. setting up your entities the right way. There's S corp, C corps, LLC, trust. There's different things, and he talks about how each of those can benefit you in a different way. And then he also talks about, depending on the state you're in, the tax differences and tax breaks you get depending on that. And also, if you're selling a product, let's say, and you can sell the product in different states, it also talks about it, adding sales tax on there because it might not be something that people think about, and they come back if the IRS ever audits you and you never charge people for taxes on the product they're selling. Now you would have to pay all that, and you can't go back to your customers and ask us, "Hey, can you pay me $3 more because I didn't charge you for taxes?" Right? So that's something to think about whenever you sell a product. If you're getting into the industry where you're selling some type of product. And then even with that, it could it could vary depending on your state because of the percentage for sales tax, stuff like that too. And then he also talks about how there might be benefits of doing stuff in different countries because of the tax benefits. And then on top of that, with the LLCs and the entities and how it's set up and different things like that, I feel like if we try to go into that, it might get too complicated. And I think we did an episode on entities in the past, uh, right, Kyle? Or did we not? I feel like we talked about it a lot.
I don't. Um,
Maybe
I
we
don't
just talked
remember.
about it.
Maybe we did as part of a part of a podcast, but I don't know if we specifically had one on just that.
Okay. Yeah. So in the book, he talks about how LLCs are one of the best ways because you can use an LLC for the business entity, but then the way it's taxed can be any different way. So you can be taxed as an S corp or a C corp or a regular I can't ever say this word as a partnership
Sole
or
proprietorship.
yeah, that's the word. Um, but yeah, he talks about how you can use it can be flexible in the way you use it and on the tax side. So again, everything we talk about, guys, it's from the book. We recommend you go back and read this book yourself, or anything we talk about here, do your research on what that would look like for you in your specific industry or state, right? Uh, and then he goes also into talking about retirement plans, which is something we talk about a lot. And he talks about how a lot of CPAs and stuff tell you to put money into 401ks or 403bs and stuff like that, which are tax breaks at the moment in that year. But he also asked the same question we asked. Why would you want to defer taxes to later? Why don't you just take care of it now when tax breaks are, our tax brackets are on the lowest it's ever been. If you keep deferring it, especially with our debt being high, and he talks about that in the book, which is why I like this book even more because it resonates with what we talk about, right? If you keep deferring taxes to later when our national debt is so high and taxes are only going to go up to pay that off, if you keep deferring it to later, you're going to pay more in taxes on it later. So why not pay the taxes now? And he also talks about how instead of deferring it, see how you can either make it tax free or make it pay for it up front altogether. So he recommends the Roth IRA a lot because it's growing tax free. But then he also talks about how you can use the Roth IRA. If it's a self-directed Roth IRA, you can use that to go invest into stocks or into even real estate and stuff like that, so that the profits grow tax-free because now it's inside a Roth IRA instead of a regular IRA. And he talks about how anything you get into, look at how much you can control. Because if you're giving the government or other people control, if it falls apart, you can't blame it. Blame it. You can't do anything about it because you didn't have control on it, right? So that's why he talks about setting up your entities the right way so you have more control on your business and your taxes. And he talks about how you can use your parents if they're retired or your kids if they're on, minors and stuff, and how you can use that because their tax brackets are going to be a lot less, and how you can give them part ownership as a limited member which limited members, something I learned too, they don't have any power on decision making or anything like that in the LLC itself. But giving them that, there's also ways to write down more taxes because now you can use their tax brackets too, along with yours. So there's different ways. Again, guys, use a financial professional, a lawyer, or a tax advisor to learn how you can do these same things for yourself. Because he talks about how using these things in different parts of your income brackets too, depending on as your income goes up. There's different strategies you can bring on to help you keep more of your money and pay less in taxes.
And one of
What do
the
you want to add
things
to
you were
next?
talking about, yeah, well, I want to go back to one of the things you were talking about in the middle because what most people might not realize is that like max. So if you're trying to lower your taxes in the given year, you mentioned, 401ks and everything and IRAs. If you maximize your contributions to those retirement accounts, they can provide you immediate tax benefits by reducing your taxable income this year. That's what you were saying, right? But if you do that, you're delaying and deferring all your taxes to the future, right? So one of the things we talk about is just having a plan to make sure that you're keeping that in mind because too many people, too many accountants, too many tax professionals almost, I want to call it like lazy, tax planning advice. They tell you just to max out your contributions this year, to lower your taxes for this year, right? To keep you happy in the moment for today, but not enough talk about the importance of long-term planning, right? Because by contributing to those IRAs, 401ks, SEP IRAs, anything that's tax deferred, you're purposely deferring taxes to down the road, right? Whereas if you focus on saving into tax-free retirement accounts like Roth IRAs, Roth 401ks, or cash value life insurance plans like we've talked about before, you pay taxes on all of those accounts this year. Use after-tax dollars to fund those, right? But your withdrawals in the future, whether it's in retirement or beforehand, those are always tax free as long as they've been inside of the account more than 5 years for Roth IRAs and Roth 401ks, technically, right? So those accounts are always tax free. But what you could get into, and one of the things he does talk about is, your tax advisor, your accountant could just try to be helping you lower your taxes for this given year, but they could ignore the effect of the long term tax planning. So something to keep in mind and to have in the back of your mind as well. And then one other powerful, tax-free strategy that I wanted to touch on is actually 1031 exchanges. And this is another benefit to real estate that I left out in the last one. But the magic of these 1031 exchanges is that when you go to sell a property, if you replace it with another property that's similar, and it actually doesn't even have to be exactly similar. It could be a single family home to an apartment complex. But you can get all of the depreciation deductions that are allowed under the law without ever having to pay tax when the property is sold. So you can roll it over into another property and you can continue to do this until the day you die and you may never have to pay any taxes from the gain. This is why typically real estate investors, if they're ever selling a property, they're rolling it right over into another new one, right?
Yeah,
And with
it's the
that,
same value or higher. Yep. If you put it into
yeah,
something that's the same value or higher, you don't have to pay the taxes on it right away, anyways.
perfect. And then he does go on, yeah, to say some people might be concerned that with like kind exchanges, they won't be able to get any actual cash in their pockets from the sale of these properties. And that's not true because you can always refinance. And you can refinance a property and pull out tax-free appreciated value. And even if you do that, you can still do another rollover or another exchange later on and not pay taxes. So these type of like kind exchanges and through 1031 exchanges is how real estate wealth a lot of the times is just continually growing and growing and it all stays tax free, right? Renji, anything else you want to add to the real estate section or is there something else you wanted to pivot
Yeah.
to from the book?
So along with the 1031 exchange, there's a couple of different types of exchanges. The 1031 would be with real estate, but with also retirement plans. Um, and this is not something that's in the book, so I'm thinking I just wanted to add because we were talking about exchanges. There's 1035 exchanges for people that have old retirement plans and stuff like that. If you want to roll it into like investment plans with the secure protection, like we talk about, you can do a 1035 exchange, which keeps you tax deferred until when you take the money out. And that's going along with that. He does talk about tax deferred investments like annuities and stuff, which allows earnings to grow tax free until withdrawn, which provides tax benefits over time because you're letting it until you touch it, just like the 401k and stuff. So if you're planning to keep it into a tax deferred account like a 401k or an IRA, he recommends annuities because you have the floor protection, you don't lose any of your principal, and it keeps it the same where you grow money over time. Now, there are different types of annuities out there, so we don't recommend all of those either. So if you want to look at what's benefit for you and specifically, this is something we ask you to schedule a call with us to see what it looks like. But that's something he mentions in there too. Uh, Go ahead and go to the next point, Kyle, unless you want to add something to that.
Yeah, nothing else to that one.
Okay.
The next thing I did want to talk about was, where did it go? Um, Charitable giving. He does talk about other ways to lower your taxes is through charitable contributions because that can result in tax deductions while still supporting charitable causes. And understanding the rules and limitations of charitable deductions is essential if you want to maximize your tax benefits. He even talked about there were some different ways to, through setting up trusts, which this is one thing we should talk about, trust in a will. A trust is you deciding who wants to have control over your assets when you're no longer here. And a will goes in part with that to actually lay out the foundations of how everything's going to work. But he talks about how you can have, charitable deductions, lower your taxable income in the given year. And also you can set up trusts to, when you're no longer here, pass along your wealth to charities. Or of course, through trusts, you can, pass along your wealth to your kids, your loved ones, your heirs. And that all not only provides additional tax advantages, but of course, protection from creditors, from people if they ever try to come in and sue you. There's also an asset protection side that goes along with additional tax benefits as well. Anything that you want to add on to trusts and wills, Renji? Because I know you've helped a lot of people actually set those up and referred clients to them too.
Yeah, it, you can. He talks about how you use trust to keep control even when you're gone. Because what happens to a lot of people if they don't have everything set up right? When you pass away, now your family might be fighting over they get or whatever. You don't know what they're gonna react like when you're gone, right? So if you set up a trust the right way, there and with entities and different things and strategies that you put in place already when you're here, then when you're gone, it's still you still have control over that because you set up all of that before you were gone. Now they have to follow that, right? So that's the only thing I wanted to add to that. It just gives you more control on what happens when you're gone. That way you know exactly where your money is going to go, where your business is going to go, how it's going to be treated. If you have life insurance and stuff, it can also be set up to where you fund the trust. So now this is where you can be like the rich families in the past, where they use a trust to fund their businesses and different investments they have. Um, and I think you talked about charitable giving already, right, Kyle? So we,
Yeah. And that's all kind of just goes along with estate planning, which is minimizing estate taxes, maximizing assets as they're passed on to beneficiaries. So those
Mhm.
different strategies as trust, gifting, and charitable giving all help you minimize your tax liabilities for your estate and when you're no longer here. So that's perfect. Yep.
Yeah. And something else he talks about is tax planning for self-employed individuals, right? As a self-employed individual, you have the advantages of deducting from your business expenses, retirement contributions, health savings plans. Um, there's it just like we talked about before with the on the business owner side. As a self-employed person, you have more deductions than an employer or an employee, right? As an employee, your income is taxed before you get it. As a self-employed person, you might be like a contractor or a 1099 of some kind. So you still have the money that comes to you, and now you can use that to take out your expenses and stuff and pay back or pay a lot less in taxes later, right? So that's something he talks about. And then he goes more into how on the in the quadrant, the right side, how the investors and the business owners can have way more benefits through tax codes and different things like that. So that's something to think about. Anything you want to add to that, Kyle?
I do not. No, nothing to that
Okay.
one.
Just looking at our notes to see what all else we might have missed.
Yeah.
um,
I
but
do
yeah,
want to talk
go ahead.
about and get into um, audits and kind of planning for audits, but I think that should be saved towards like the end.
Hmm.
Um, let's see, we did talk about tax diversification, right? What about, okay, so education savings accounts and saving for kids. Education and savings accounts like 529 plans can offer different tax advantages for funding higher education expenses, including tax-free growth and withdrawals for qualified education expenses. Now, these withdrawals will be tax-free only if they're for college, but there are some downsides to 529 plans, that being one of them. Another one is it is exposed to market risk. So just like maybe your 401ks, the accounts will go up and down over time with the market. Now, that may or may not be a concern for you. And, a recent rule that just came out is let's say your kid doesn't go to college. They did just now release a new rule where you can roll that over into a Roth IRA. In previous years, you would actually be penalized if your kids didn't go to college and you try to access that money. Nowadays, they did come out with more, leniency with that. But another strategy we've talked about before with, aside from the 529 plan, is using something like an IUL or cash value life insurance because that is still tax free. You can access it at any time for any reason, and it doesn't just have to be for higher education expenses, for colleges, right? And another downside with the 529 plans is if your child goes to a college that's out of state, um, you can't use the 529 plan for that. You got to find another route. Right, and that could be I could be off in the verbiage there, but I think that is a downside. There is something in that, and I
Yeah,
don't
he
have the chapter in front of me, but
he does say in the chapter these 529 plans can work well for you if they go to college or higher education. Otherwise, he said it's not the best thing if you know they're not going to go out of college, right? And then he also says to be careful with these plans because there's a lot of, like Kyle mentioned, there's a lot of things in there that if you do something wrong, it can be a problem for you later. So just be careful when you get into those plans if that's something you're getting into. And like Kyle mentioned, there are better plans out there for kids that would work way better and that can grow tax free. That way, if you use it for whatever you use it for, if they decide not to go to college, it'll be tax free. It'll still stay tax free. So just something to think about. And also, it's protected from the market. Another big benefit of those tax free accounts. Um, and something he did mention too, I thought I made a note of this, but it doesn't look like it is. But he talks about education, right? If you spend money on educating yourself on getting your business better, right? Let's say if you're into IT and stuff like that, if you took a course to get better at coding and stuff like that, those are expenses that you could write off in the business because you're spending money on an expense that can make your business better. It's about furthering your business, right? So those are all things that you can write off and keep more of that. Yeah, I thought I added that here, but I guess it's not. Um, Anything else you want to add, Kyle?
I think just the last couple of things that we can talk about, and it's going to go back to it'll go back to retirement planning and just investments in general. But there's a lot of tax strategies for investments. You know, investors can employ different strategies such as tax loss harvesting, capital gains planning, and asset location optimization to help you overall lower your taxes on investment income. And there's really a lot to unravel there, which we won't do in this podcast just because of the time. But it's all inside of the book, you know, as far as short-term capital gains versus long-term capital gains and how to make sure that your investments are actually receiving the lowest taxable rates as possible. And then one other paragraph I wanted to read is on page 190, talking about the lie that's contained with the basic premise for these retirement plans, and he calls it the retirement plan lie. And he says that they presume that when you retire you will be in a lower tax bracket than when you are working, and the only way that this could possibly be true is if you're to retire poor, right? So like we talked about it before, financial advisors are even, you know, big proponents of this too. Like, oh, you're going to be in a lower tax bracket in retirement because you're going to be making less money. But like, yeah, like literally he's telling you if you plan to retire poor, yes, you don't have to worry about taxes. But like whose goal is ever to retire poor? Right? I bet all of our listeners, that's not their goal, right? So this is even more so why tax-free retirement planning makes sense. And if you plan on retiring with even the same amount of income that you have while you're working, you could still easily be in a higher tax bracket when you retire because of some of the uncertainties around who knows what the future tax rates are going to be. Taxes have to go up over the next 10, 20, 30 years. And then also, like we mentioned before, you're not going to have some of those deductions when you retire, right? When you go to retire, that probably will mean liquidating some of your assets and some of your business, which there goes all those deductions. You're probably not going to have kids that live in the household anymore. Let's pray when you're 60, 65, maybe you don't have an 18-year-old still in your home. You might, and that's okay. But more likely than not, those deductions are going to be gone, right? And for most people, when they get to retirement, their mortgage is paid off and you get a deduction for having a mortgage. All these deductions don't exist when you go to retire, right? So he talks about the retirement plan lie and how they say you don't have to worry about taxes in retirement, but that's like we said before, that's just lazy tax planning, right? And then with that, Renji, we do need to talk about audits and proper documentation and record keeping. I would say that's next, and then we could probably wrap up the show unless there's anything else you want to touch on and add.
No, I think, yeah, let's go into that. So proper record keeping, right? So if he does talk about how if you took someone out for lunch or dinner or a meal or something and you talk about business and how you can further advance the business or make the business better or whatever changes you, any type of conversation you have about business, when you get that receipt, if you better note on that receipt the date and what you talked about. That way it's just for record keeping. That way if you ever have an audit, you have proof of what you talked about that day, right? And he talks about keeping minutes if you have an entity and stuff like that. That way it just protects you. Um, and he says not to be scared of an audit, because if you have proper tax advisors and bookkeeping and all of those set up in right, and you have the minutes and everything done, then when the tax advisor, if you ever get into an audit, if they come, you just hand it over to the tax advisor. That's what they're there for. You don't have to take on the audit yourself. The tax advisor is there to protect you in an audit, because if they did their job right, hey, you just hand them all the stuff that you did because you've been planning for the whole year. You know, every investment you went to, you are planning into it. So now you don't have to worry about going back to find all the proof or whatever. You have it all already done. So if you're prepared when you go into something, yes, there's anxiety and everything from, it being new or something like that. But if you're prepared, you don't have to worry about too much, because everything will go a lot smoother, which is what he talks about every time. He's one of his businesses that he was tax as the CPA for. Anytime there was an audit, it went smoothly because they prepared for every scenario that came across in front of them. So just being prepared and planning for no matter what business you get into, whatever entity you set up, however you plan for it tax wise, whatever expenses you have, if you plan it all the right way, you don't have to worry about it too much because it will go a lot smoother. And he also talks about how to file things specific ways so that it doesn't flag them for an audit too, right? But yeah, and going back to uh, along with that, going back to what Kyle was talking about before, when you plan for retirement, right? If you're planning to defer everything to when you're retired, now a lot of times people when they put aside vacation time and all this stuff to do it while they're retiring. But if you're retiring poor with less money than what you're making right now, where's that money going to come from to go enjoy that time, right? And he mentions that in the book, which is powerful. Not only that, if you're a grandparent at that time, how about don't you want money to be able to spoil your grandkids? Right? So you need to plan. Again, this goes back to proper planning financially and for taxes so that you can live your retirement well instead of struggling through retirement. Anything you want to add to that, Kyle?
Yeah, I did find on page 248, he talks about how to deduct like your meals and your travel. And that is it would require a note on your receipt about who you're with, the business nature of your relationship, where you were, and what you discussed. And he says, I suggest you simply note that information on the receipt right when you get it. And that's like the proper documentation that's needed from receipts for your meals, for your travel. This is one thing we actually didn't talk about. You can write off your travel, and he talks about, potentially investing where you like to travel. That way you always have a business excuse and a business reason to go there. Right? If you like to travel to Hawaii, getting some type of business, relationship, investment property, something in Hawaii. And that way, whenever you go and visit, you can write off those trips, right? And to do that, like we said, keep track of who you were with, what the business nature of the trip would be, where you were, what you discussed, what you did, and how that had an impact on your business. He also talks about just about anything can be written off as long as you have a valid reason why it's ordinary and necessary. Those are the two main key points. And then, yeah, with all of that, proper documentation, like there's never any reason to ever be scared of an audit because you've got everything that's aligned, right? With that, I think the last thing I'll leave us with, Renji, is there anything else you want to add before I kind of wrap us up?
No, I think we talked enough about taxes.
For sure. I think so. A 40-minute podcast on taxes. That's impressive. With that, the last thing I'll say, look, the last tax tip that he leaves is to hire the right tax advisor. This doesn't just require knowing the right questions to ask to a potential tax advisor, but it also means knowing what questions your tax advisor should be asking you. And with that, some of the things your tax advisor should be asking you is what some of your dreams and goals are, where you want to go so they can help with the future, tax planning. Obviously describing your current and projected family situation in regards to, spouse and or children. Describe your current and projected investments, current and projected business situation. Where is your money coming from? Where is your money going? Explain your philosophy of tax reduction. What would you like to learn about the tax laws? How do you learn best? Having your tax advisor ask you, how do you learn best? Whether that's auditory, visual, tactile, or kinesthetic. And then in a perfect world, how would you like to work with your CPA, and what other members of your team are there that he or she should maybe collaborate with, right? So those are the questions that your tax advisors should be asking you. Now, one other thing I'll leave you with, and Renji and I created a PDF document that we'll share. You want to make sure you're hiring the right CPA, right? So what questions should you be asking them? We created a PDF document with probably the only 7 questions you would need to interview your tax professional to make sure that your tax professional is working for you and not the IRS, right? Make sure he's maximizing your benefits and not leaving money on the table. Because as we talked about before, this is your money. It's not the government's. It is your legal responsibility to pay as much ever in taxes as you legally owe. And the tax law was written to help you lower your taxes. So if you want to make sure you have the best tax professional, we're going to include a link at the bottom of this page in the description of the YouTube video. Click on that link and that'll take you to a spot where you can download our PDF. That way you can already have it all written out and you can take this to interview your CPA or your tax advisors for the upcoming years. Now remember, don't start waiting until the end of the year to do your tax planning. We're purposely releasing this video, and this video is going to be actually released on April 15th. We're recording it a couple days earlier, but it's being released purposely on tax day. So tax planning doesn't start at the end of the year. It starts right now, especially if you're watching this video, especially if you learned anything from this video. So click the link below to get the only 7 questions that you need to ask your tax advisor to make sure they're working on your side and not the government's. And with that, thank you guys for tuning in to another episode of the Wealth Building for Dummies podcast. Make sure to like, comment, subscribe, share this video with any of your friends that you think would benefit from learning some of these, tax principles, and go grab this book, Tax-Free Wealth by Tom Wheelwright. Maybe we'll include a link below to help you guys easily go purchase it from Amazon. I think that would be helpful as well. And if you're serious about your money, serious about business, you should understand tax laws, and you should make sure that you're maximizing those as well. So take care. Thank you guys for tuning in. Hope everyone has a great rest of your day.